Today, the economic China syndrome. Down the Rabbit Hole, episode 5. Hello again, it's Martin North from Digital Finance Analytics, one of his posts covering finance and property news with a distinctively Australian flavour. Today I'm joined by George, tin hat and all, and we're going to go deep down the rabbit hole and try and get behind what's really going on. Hi George.
Hello Martin, how are you?
Pretty good. Nice to pick up the conversation again. A lot going on, a lot to talk about.
I think so. I've been following things that have been happening overseas with the Federal Reserve. Yours is not the only channel I watch. I do watch John. I watch another man by the name of Florian Heiss. There's a lot of very good people around, and even overseas, and they're entertaining and so forth. They all seem to be looking for an escape plan. They all know there's something not quite right. We're all talking much about the same thing. I think we all know that there's a big money printing binge going on with bankers all around the world. Governments are quite happy to kind of go along with all of that, and of course the debt bubble just keeps growing, both public and private. I think we're all looking for some sort of safe haven.
Well, I think the best way to put it is reality is on the blink, right? In other words, what you think is going on and what is actually going on might not be quite the same.
I think you're right, and I think that I think that what happens is we've got classical models that people go along with, and they say, then when this usually happens, gold will go up.
Yeah, and X equals Y.
Yes, yeah. Exactly. And you say, so the little globe lights up a bit like Beavis and Butthead when they have a little globe sitting over the top. My son watches that. And they think, aha, I know what I'm going to do. And of course, what tends to happen is that people go with their little plan and it doesn't work.
The point you've got to understand is a lot of the people speaking on YouTube and running YouTube channels are selling specific things, right? So they're selling gold or silver or hedge funds or whatever it is. There aren't that many people who are standing back and just thinking about it objectively without something to sell. And unfortunately, I think sometimes people get a bit caught by the fact that, they are spinning a yarn.
Look, I tend to agree. And not necessarily that sometimes I think some of them that are there to sell things also believe in what they're selling.
Oh, I'm not saying they don't, but it is, and you never know, are they selling it because they believe something is happening, or are they selling it because they can make a profit from what's happening? I don't know. I mean, that's a vicious or virtuous circle, depending on how you look at it. But the point is, they do have interests. I mean, there are some people out there with big audiences who are very, very big on gold and would want you to buy gold. They will want to sell gold to you. And the reason, of course, is partly because they think inflation's coming and gold's a hedge. But funnily enough, they're also in the gold section and make money every time somebody buys gold off them. So the question is, how can you unpick that, and how can you avoid being tripped up by people who might actually have a vested interest?
Well, I think the vested interest will always be there, Martin. I think that what we have to do sometimes is step back and have a look at what's happening, and then ask ourselves just exactly what sort of system do we have here. And I'm beginning to see a very sinister system of government collusion with central bankers, obviously. I mean, you'd know that, and you'd know that already. And don't forget that in 1971, Nixon took us off the gold standard. So once we're taken off the gold standard, do we have a market in the gold area? Do we have a precious metals market, or are the bankers actually controlling it, and they've got full control of it, which I'm starting to think is exactly what's happening. And I think that while people would say, look, have a look at the derivatives market, the speculation going on all around the world, and it's starting to look like this tsunami of debt, a wall. It's like a tidal wave coming at us. And you think, well, surely if you buy gold and silver, for example, that should be something that it's certainly out of the system. And if it's out of the system, is it in their control? Well, I would say yes, it's still in their control. because the central bankers seem to be manipulating it, and they are manipulating pretty well everything. So I don't think we've got a market.
The point to make there, of course, is that the bullion banks are the big international investment banks, right? So they have huge holdings of precious metals and huge positions. They've got those positions leveraged through derivatives of all sorts and sizes and shapes. And to an extent, they are controlling those markets directly or indirectly. And your point about the relationship between the big banks and central banks is a very interesting one. Of course, in the US, the Fed is owned by the banks. The Reserve Bank in Australia, in theory, is independent from the banks and independent from government. We could debate whether that is true or not as a separate issue, but certainly in the US, the Fed's alignment to the interests of the big banks is absolutely there for everyone to see. That's one of the reasons why the Fed is saying, we don't want to take net rates negative, because they know that negative interest rates would impact the banks. Also, there's massive revolving doors between the banks and the central banks and back, right? So there is this sort of correlation, I think. The issue, of course, for me is, you've got central banks, you've got the big banking system that they are protecting, and the liquidity is supporting the banking system. But what is the relationship between all of that stuff and the real economy and real businesses and real people? And then where do governments fit in all this? So who's calling the shots? Is it essentially the governments standing back and saying, independent central banks, you go do whatever you do, we'll just sort of stand back and applaud? Or are they being more proactive? So in Australia, we have a thing called the Council of Financial Regulators, which is the Reserve Bank, APRA, ASIC, and the Treasury all sitting around the table together, right? So you could all say colluding together, right? And I don't know, because I'm not a fly on the wall there, and we don't see much from the minutes, the very flaky minutes that they publish. But you would imagine that the central bank and the Treasury and the other regulators are all effectively on the same hymn sheet, right? The question is, who's writing the song?
I'm starting to think we're seeing a bunch of alcoholics around a bar.
Okay.
You know what I'm getting at here. In other words, that no one's regulating anybody. The whole system is going in one direction.
Well, it's very interesting, because APRA and the Reserve Bank recently have said, house prices, not our issue, nothing to do with us, right? Now, the interesting question is, well, hang on a moment, who is then responsible in Australia? Let's take Australia. Who is responsible for house prices in Australia? And that's actually a really, really interesting question, right? Because that the Reserve Bank wants to create the wealth effect, because they think that will actually feed into people spending more and then supporting GDP. So they're quite keen for house prices to go up. APRA is only interested in financial stability at the macro level, not down at the individual level. So they don't really care about what's happening to house prices or debt. So the question is, who is in Australia accountable for house prices? And the short answer is, I don't think anybody is. They all go, not my problem.
I think they all point to each other, like they go at the same time.
No, I think they go like
that. I know. I just think that look, we are getting to a point where lots of very clever people. The debate is heating up, and Harry Dent will say we're going to see a 40% drop, and somebody else will say, and Schiff will say, we're going to see gold go to the moon. And you think, well, hang on a second. As far as the market's concerned, well, we know one thing. We have booms and busts, and that seems to happen. And it certainly happened last year in March on the share market, and now we've
but that was a blip. That wasn't. If you look carefully, my view is we are in the very late stages of a bull run that started in post the GFC, right? So basically, we've gone up. We did that dip, but that was an artificial dip, and then we're still tracking. So we are late cycle, and I agree with you. We tend to have these boom and bust cycles. Of course, a lot of central bankers some time ago were celebrating the fact that we've cured the boom bust cycle. Right? We've now got linear growth forever, except only because you keep cutting interest rates and you keep doing more debt and enabling more debt and more quantitative easing. But the question is, how much further can that go before the whole thing just falls apart? We've added close to 30 trillion of additional debt in the last year. The Fed has done QE. Well, we've done QE here now. Everybody's doing it, and it's not really necessarily changing the game. It's just continuing the same, perpetuating the same. And so the question has to be sort of asked, well, hang on a moment, going back to your people around the table, supping, well, they all sort of think they're doing the right thing, maybe, or maybe they don't.
You're very kind, Martin. You're very kind.
The outcome is not what they expected nor want. And if you look at the historical forecasting versus what actually happened, they're just way off target. They've been consistently way off target, on inflation, on unemployment, and even on GDP growth. So, well, a lot of private companies, if they'd got the same sort of outcomes, they wouldn't still be in business.
No. I mean, it seems to me like there's one group that can stay in business and do anything they like, and anybody else would just go out of business. So, I think when you look at this, do you see something a bit more sinister, possibly?
Well, it goes back to one of our earlier conversations, right? Because there's either a cock-up theory of history or there's the conspiracy theory of history. In other words, are there people, behind the people, basically with a plan that they're actually sort of, playing out, right? Or is it happenstance, groupthink, a narrow set of philosophies that are actually driving behaviour in the same direction? You and I would probably differ slightly. I think you'd probably veer more tinfoil hat and all towards conspiracy and say there are people who are actually driving this and have an agenda, call it the reset or whatever you want to call it. But basically there is a plan, there's a playbook which is being played out. My own perspective at the moment is maybe, but you could also make it quite a strong argument for the cock-up theory.
So the problem here, I suppose, and this is where we kind of we need a little bit of a challenge, Martin. So it's not a bad thing, but the way I see it, the whole education system, from so many years of researching, seems to be targeted towards corporate benefit. So you go to an education system, you go to tertiary level, and you graduate and you go into law. And what does law do? It supports the statute law, which supports the government, which supports maybe the banks and the corporations. So naturally enough, they're making great profits. It seems like the little businesses are going down and the big businesses are just getting bigger. I mean, it's not just it seems. I mean, it is happening because over the years you've seen a big shift into massive companies like Bunnings. We've got Costco, Coles, Woolworths. Okay, now think about the control that we've got here, and this is about control. And if we continue down this path, am I correct in saying that what's happening is income stripping is happening in the process? Because as you print more money, this is creating inflation, asset bubbles, property bubbles, and of course incomes, are they keeping up? Well, you mentioned the K-shaped recovery. Well, obviously some are and some aren't. So it's not a healthy outlook. And of course, then we've got coronavirus.
Well, let's just talk about profits, right? So corporate profits have done very well. If you look at the trajectory of corporate profits over the last 10 or 15 years, right? They have been very, very strong. That's pretty much true around the world, including Australia. Now, that's partly driven by more debt. It's partly driven by lower interest rates. It's partly driven by the quantitative easing processes. So corporate profits going up, shareholders doing very well, right?
Don't forget tax. Don't forget tax as well.
Well, of course, yeah, and the international tax structures. Now, of course, Yellen is saying, well, you've got to change that, and Biden said we need a sort of a new plan on company tax. Well, good luck with that. But the fact is that if you look at ordinary incomes, that's true not just here, but let's talk about Australia. There's been no growth in real incomes since 2012 in real terms, right, for most people. And if you look, and And if you look at it more carefully, in fact, there has been significant income growth amongst very rich people. CEO salaries have gone way higher, and senior executives way higher. But everybody else, the normal working people in the country, have had no real income growth for a decade, right? So, and in fact, if you look in the US, it's even worse, and if you look in Europe, it's even worse as well. So there is a stagnation when it comes to real incomes. And then the other point is, if you look at the tax take, corporate taxes are actually going down. Well, personal taxes are not going down, they're going up. So we've actually got a pincer movement with personal taxes rising at a time when incomes are not growing, in real terms. So there is a huge compression on a lot of people. That's the concept of the K, right? So there are some doing really well, everything's fine. There's another proportion not doing well at all. Now, again, the question is that just happenstance or is that engineered? To my mind, it's engineered. It's engineered because of the power of large companies who are aligned to the banks, who are aligned to the government and all those things as well. It's all part of that same construct. But individuals coming out the end of it, the cannon fodder as you like, aren't doing particularly well. And then the final point, the other point to make is, and the other thing that's gone up dramatically is debt. So personal debt has gone up dramatically. So a lot of it's to do with mortgages. And then the interesting question is, well, why is that? Well, that is because more and more and more individuals whose incomes have not been rising are relying on debt to be able to actually maintain their lifestyle. And it becomes reduced to the point where their role is essentially to work sufficiently to pay the debt, to work sufficiently to pay the debt. Right? And now you get to the point of saying, well, hang on a moment, well, why don't you just extend the life of a mortgage from 25 years to 30 years, or in Japan, 50 years or more? That's okay, because as long as people go on repaying, you just are a cash flow, everything's fine, right? So we are now at the tipping point where essentially most people are, in debt to an extent and are continuing to pay that debt and will pay it probably for most of their working life and beyond. Now, the question is that a sensible structure on which to build an economy and to build a society, right? And who are the winners and who are the losers?
Oh, yes, I think what I see happening is that are people going to have an economy that's going to last that long to continue paying off mortgages without, because we're assuming that we can go for 50 years without a sudden crash and a massive loss of employment. And if that happens, then where's the person who took the loan going to be left trying to pay off a debt that is now to last 50 years? And to me, I see the economy getting weaker, not stronger overall. It might be strong for the big companies, and it may be strong, and we have a thing called a PE ratio. Now imagine all those people who are investing in houses, and they keep calling houses an investment. I would have thought that, a home for someone to live in shouldn't be an investment. An investment should be something that's productive, that creates something. So if you're going to have a home, it should be a home. It costs you to have a home. Whereas if you go and invest in a company that's manufacturing and exporting and creating jobs, that's an investment. But for some reason, they've decided to turn the home into the investment. Now, the only way I think I can see property turning into investment is if you can actually then rent it or use it to create something. And I remember back, for example, if we look at the GFC, and Peter Schiff comes to mind here, and he went along and he did interviews with people who were complaining that Wall Street was a big conglomerate that was swallowing up all their wealth. And Peter Schiff said, well, I'm one of the 1%. He said, why are you protesting at Wall Street when you should be at Congress protesting to the politicians who allow Wall Street to do what they do? Who were the ones that actually bailed out the banks when the GFC happened? Because they're the problem. You can't blame Wall Street. You have to look at your politicians. You see what I'm saying? I tend to agree with Peter Schiff on this one. I think he's right, and I think that's a very mature attitude and a mature look at what is really happening, because he's actually standing back and he's looking at what's taken place. And I think, yep.
So the question is, right, the question really is, the thing that drives Wall Street and other financial markets is greed. It's about making more and more money, right? Now the question is greed good, to quote a certain film, right? And is that what it's about? So essentially, is it about the sweating of financial assets to make more financial assets, create more financial assets, right? So that's sort of that iteration. And if you look carefully at the way that the financial system is working, more and more of the money that's being created in terms of profits is through the ongoing and shaping of risk and the translation of risk. I mean, if you look at, the local crash that we had recently, right, with Greensill, which translated into GFG, which meant that there were local businesses here in Australia in the steel sector suddenly falling apart because of those global structures. But there were a whole bunch of leverages and a whole bunch of intercompany connections globally that actually seems a million miles away from that individual business, but actually was driving pretty much everything that's going. That's an example of these big connections and the fact that everything sort of rolls up back to taking on risk and translating risk and repackaging risk, which is what people like Greensill were doing. So that's a critical part of what Wall Street and other financial markets have been doing. And the question is that a productive activity? Right?
All right.
My own view is it
Yes.
is not actually productive. It is not actually good for the broader economy, and it's not good for anybody else. It's creating significant wealth for a small proportion of people involved directly or indirectly, both through shareholding and directly there. But actually, it is not creating value in the real economy, and it's not actually necessarily creating things that we need for our future. And then, by the way, if you go back, banking ultimately was about enabling real businesses to do real things. Banking was not about taking speculative bets and speculative positions and cross-managing risks, through the financial system and through derivatives. It was actually lending real money to real businesses. And that's what we're missing in Australia, and I think also in many other places around the world. We've lost the plot as to what banking is actually about. Banking is not about the financialization of everything, right? Banking is not about reducing people, frankly, to a cash flow cipher, which is what's actually happening. Banking was about investing in building businesses and enabling people to build things. Now, that's what we need. Now, if the private sector can't do that, then the only answer is we need a bank that is actually publicly owned, that can actually invest in those real things that we need, not just more financialization things, not just more risk-taking, not just more derivatives trading. None of that's productive. But most of the effort, most of the activity, most of the value that's been created is in this sort of speculative sphere, not in the real economy.
I have to put my tinfoil hat on here, okay? And I'll give you an answer to this. There's a term they say, power corrupts. Absolute power corrupts absolutely. You've probably heard that term. Now, let's give some examples. Have you ever heard that the economic hitman? You ever heard that one? You can go into a country and you can take it over using a banking system. Yep. And then you put the whole country into so much debt that you can virtually take all its resources. The temptation is pretty strong when you've got international banking, if you think about it. Of course, unfettered, unchecked power like that. And then all of a sudden, here we are with coronavirus. And now we've got all the pharmaceutical companies rushing in to get their pharmaceutical products in place. Now, we won't go into the conspiracy theories of the AstraZeneca and the Pfizer and all this stuff, although there's been lots of stories.
Don't go there. Don't go there. There's no point.
Go there. Don't like that. But look, think about it. I just see corporate monopolies supported by governments all around the world. And then, of course, we rely on our media. And, of course, I think more information comes from people like yourself, Martin, and John Adams and Peter Schiff and Harry Dent. They're very, very smart people, all with great arguments. And it seems like they're all coming at the situation from different angles. All of them appear to be right. and yet none of them are right. Because you say, but hang on, if the market goes down, doesn't then gold go up? And you think, well, not necessarily. And if the dollar goes down, doesn't that create competition and help us export? But nobody wants to export from Australia. They want to build houses here, but they don't want to export. So you think, hang on, do we really have a free market here? I'm just saying, it's starting to look less and less like a free market. What do you think?
Well, the question is actually, do we actually have capitalism? Well, we have controlled capitalism. We have a version of capitalism where nobody can lose because of all of the interventions and because of the quantitative easing, which means that effectively the concept of risk-taking, and frankly, when you make a bad choice and you take a risk, you actually lose. Right? Nobody, in corporate land is being allowed to lose. Basically, they're going to be bailed out left, right, and centre by governments and by central banks, right? So that's the first flag that says things aren't quite right. The other is, of course, there are decisions that people are taking in government and in the sphere of banking and central banking to do X or to do Y. And when they do X, it has certain consequences, and when they do Y, it has certain consequences. Now, the question is, what are those consequences, and what are the implicit assumptions that they are making when they actually make those specific suggestions and recommendations? So when they move into quantitative easing, what are they actually trying to do, right? Are they actually trying to do what they say they're trying to do, which is, of course, to bring full employment back and, they're doing it for the best interests of the whole economy, or are they doing it to protect the financial system, to protect the government? Well, my theory is probably more of the latter than the former. The other point I'd make is...
Well, the K-shaped recovery, there you are, there's the example.
Yeah, no, exactly right. The other point, there's a wonderful quote which keeps coming up in my mind, which is, don't let a good crisis go to waste, right? So when you have a crisis, whether it's engineered or whether it actually just emerges, and COVID is probably a good example of that, then what you start seeing is the tightening of civil liberties and the removal of freedoms and all of those things, and the imposition of rules and the interjection of you can't do that, you can't do this, etc., right? Which shows you that the inherent settings of governments are actually to be dictatorial and basically go dictate things, right? So this is a perfect example to impose more restrictions, take away freedoms, etc. Now, I should be very interested to see to what extent, as we go through the other side, hopefully, of the virus journey, whether those freedoms are restored or whether we suddenly find permanently we've now got more police powers than we had previously. We've got more surveillance powers than we had previously. I know in the UK, for example, there is a bill currently working its way through which will make permanent some of the changes that were made temporary previously, right? I think in Australia we've also lost more of our civil liberties than we actually realise we have at the moment. And the question then is, well, is that deliberate? Or is it actually just opportunistic?
You're getting into conspiracy theory there.
Well, it goes back to what I said, right? So you can either make an argument to say, well, it's just a response to what happened and, people are trying to do the best they can, or there is an overarching wish to make things more controlled and basically reduce people's freedom, take less responsibility for personal actions, those sorts of things. All of those things, you see, are in play at the moment. And that can go as far as internet censorship, and it can go as far as, ID cards. And then you think of China and the surveillance state they've got there and think, well, there might be some people, even in Canberra, who will be salivating at the sorts of things that China are doing and saying, well, we'd love to do a little bit of that here, a few more cameras here, a few more ID cards.
They're already appearing. I've noticed in Victoria, I'm starting to see cameras pop up. I tend to notice, a lot of people don't look around them, but I do. I keep an eye on things. I've also noticed the strange behaviour of the media and things like our politicians saying, this is the new normal. This is the new normal. This is the new normal. And I'm thinking, how come they all seem to be from every state, every country, overseas, here, they all coincidentally say, this is the new normal. And I'm thinking, I think there's something a little bit strange here. It's almost like it's like you see a bunch of people sitting out the front of your property, and they're just standing there, and you come back half an hour later and there's another 50 of them, and you start to get a little bit concerned, and you think, I'm not really comfortable with what's going on here. I suspect there's something not quite right. Well, the behaviour of our politicians and our media certainly make me think this. And also, I've noticed that the media, when they want to control something, they control it within the media. So they get a journalist to talk to a journalist. And you think, hang on, what happened to these people that are protesting, these nut jobs, these conspiracy theorists, etc., that are protesting? How come we never hear from them? Or if we do, it's a short grab like the vaccine. It's poisonous. Stop. You go, oh, that told us a lot, didn't it? And then they throw in the conspiracy theorist and all that other stuff, and you think, but no one's actually sitting down and talking about it. Now, the interesting thing that I said to you before, that power corrupts, absolute power corrupts absolutely. Well, think of the temptation of a massive corporation like a pharmaceutical company. Of course, imagine we took it to this level, that not only could you manufacture products that, instead of curing things, so if there's a disease or something, you don't cure it, you manage it, which means the customer comes back and continually buys the product. Well, as a CEO of a company like that, surely that would be in the interest of the shareholder and business to keep that going. Imagine if you cured the disease and said, here's one tablet, take it and it's gone. I don't think your shareholders would be too happy about that, do you, Martin?
No.
And hang on, I'll go one
another
further.
Another example would be if you had a company that produced a perfect pair of shoes that never wore out.
Yeah, of course.
They'd go out of business.
Of course they would. So the point is, okay, that's a good point. Let's take it one step further. We'll climb up a little bit here now. Yeah. Imagine if the pharmaceutical company could be so, deceitful as to go one step further and actually create the disease and then have the pharmaceuticals for it. Imagine we went that far. Do you think the world is at that stage? There's a good question. But you're up against a massive conglomerate that we're talking about here. And of course the media. Who do the media serve? Who does the government serve? I think the government is quite a way down. And I think that you'll find that the collusion is so great. It takes me back to that famous speech of John F. Kennedy when he made that speech, for we are opposed against a monolithic conspiracy. Now, funny, he didn't seem to live that long after he made that speech, and I think it was a little bit. He said where he talked about concealment, and he talked about it's hardly worth keeping all this if we can't keep the traditions of our society. I think that the level of greed and the level of corruption around the world is that far gone. I think we're at that point. And of course, you're up against it because do you do your job or do you go out and start looking at these things? I happen to not have that much work. I'm in that full employed 1 hour a week. I'm in the K that dropped down, not the K that went up. Doesn't matter. I'm still alive. I'm still surviving. But the point is, I just don't see the sort of economy we used to have today. If we go back 20 years, it was a different economy. And for the young people who are probably sitting there, and I spoke to, my son goes to this event every Friday night, and there was a young boy there that goes to university, and he's talking about communism. And he said, I think communism would be much better than what we have. And I'm thinking, well, you never really had a free market to kind of see how we call it capitalism. I don't like capitalism per se, because ism is control. You see? So if you have capitalism, communism, socialism, ism is control. So what do I like? I like free market with checks and balances. In other words, with a regulator that is completely independent of the companies that they have to regulate. And when you talk about APRA, ACCC, the Treasury, etc., I come back to that point. It's like seeing a bunch of alcoholics sitting at a bar, and you think, they're going to keep the bar in check, are they? That's what I see. I don't. What do you think of what I just said there about companies having that sort of level of control where they can create their own markets? Even the bankers can create a market.
Yeah. Well, I think I'd agree with you that if I go back to the financial system and the financial sector, is absolutely it's self-perpetuating, but they do need the cannon fodder, right? The cannon fodder are people who are willing to borrow. And that's why they need more mortgages. That's why they have to sell more mortgages. That's why they want people with longer debts. Because if you go on paying, then you've got paying cash flow, and cash flow it basically is valuable to those organisations. So they need that. They need consumers who are going to continue to buy stuff. So that's where the consumer economy comes from, and that's why you keep getting flog stuff, and that's why things don't last as long as they used to. Going back to my perfect pair of shoes. If I had a pair of shoes that never wore out, I wouldn't buy another pair of shoes, right? So that, guess what? Now the average lifespan of pretty much everything you buy is a lot less than it was. It's engineered in, right? That's deliberate. So wherever you look, you can see how large corporations are actually shaping the agenda for their shareholders and to maximize the returns. Now, you can say that for the banking system. You can say that for other types of corporates. But here's a sort of come up a level, right? What about individual countries, right? Individual countries, they have a GDP number. A GDP is based on activity, so they need more activity to actually make the GDP number go up. And more activity is not necessarily productive things. So, for example, every type of activity, whether it's legal or illegal, is actually GDP positive, right?
Yes.
So
Yeah.
you got to say, well, hang on a moment, are we measuring the right thing? Maybe we should be measuring something different, which tells us something more about, how we're thinking about life or wellness or something. And in fact, in New Zealand, they're trying to experiment with alternative measures of well-being and not use GDP. So GDP is a really bad measure of anything useful. It's just more stuff, whether it's good stuff, bad stuff, whether it's produced effectively or produced with lots of byproducts and pollution, doesn't matter, right? And you go up again and say, well, hang on a moment, but you can take it more broadly, because now there are people, and the World Economic Forum is a good place to sort of come to. There are people saying we need a complete reset of the way that our whole system is going, right? And they talk about the Great Reset, Klaus Schwab and all his, he's speaking there. Now, when you actually peel away the onion, it's not completely clear what they're talking about, but they're
very clever.
Saying,
they're very clever in the way they use their words: sustainable development and climate controls, and it sounds wonderful.
Yeah, so they've got wrappers around it, which includes things like, tackling the climate issues, tackling poverty. So, at one level, it sounds very good. When you actually stop and think about it, what they're actually saying, right? And they're saying things like, well, you actually won't own anything, you'll rent everything, right? Well, go right back to my cash flow issue, well, if you think about it, if you've got a mortgage, you don't own it, right? All you're doing is just paying money to continue to live in it, right?
Yes, and until you pay off the mortgage.
Yeah, but if you've got a very large mortgage and a very long debt, you're probably going to fall over before you actually take ownership of it. So the point is, there are some really hard questions we need to ask, and I'll give you one other example, right? The IMF has something called special drawing rights, SDRs, right? Special drawing rights are effectively a set of borrows and lends from one country to another country, which effectively allows them to pour liquidity back into countries around the world. Well, the IMF is wanting to issue another $680 billion worth of SDRs as part of this liquidity support process to help the economy, right? So in other words, more debt, right? And this is now another example of fiat, because basically what they do is they create the assets and the liabilities, and therefore they've created, boom, out of nowhere, yet more funds. Those can be then converted into real currencies, and suddenly countries' balance sheets look a whole lot better. Now, that's another example, and it's the same tenor as quantitative easing, where what they're doing is just creating more and more and more of this liquidity stuff on the assumption that somehow magically it's going to solve the fundamental issue. Now, the fundamental issue is that throwing more liquidity on the bonfire isn't necessarily going to put the bonfire out.
I totally agree. Can I say that in lay speak?
Yeah.
Okay, in lay speak, that means that the banks can create unearned money out of thin air and then lend it out to people and countries who can then lend it out to their populations at low interest rates, which they always love. But of course, what does that do? It creates asset bubbles, and of course everything goes up. And are they better off? Now, if you own a house, for example, and it's worth $3 million, and you have no cash flow, and you're trying to maintain your lifestyle, are you a rich person? I'm just putting it out there.
Of course, the answer is, well, you can reverse mortgage that, so you can now create a income flow off that asset, right? So in other words, you are a cash flow again, right?
Of course. Well, Paul Keating was talking about that on 7:30 Report just recently, and I'm thinking, hang on a second. If we're living in a truly free society with freedoms that are meant to help you grow your wealth over time, because that was the whole idea of a Western world democracy with a free market called capitalism, and I do emphasise the ism part, which stands for control, then surely as you're getting older and you're getting into your later stages with your savings, supposedly that hold any kind of value, you should be improving your lot, not getting to the point where you have to reverse mortgage. And then to have people saying, oh, you're rich. And you say, well, rich people can afford holidays and rich people can afford to buy a new car. They don't just suddenly find themselves in a situation where the inflation factors come up so high and suddenly their rates and everything are going up and they're not keeping up because their incomes aren't keeping up. So this idea of you'll own nothing and you'll be happy, if they continue this system of printing, if they keep it going, and we've seen the results because they've been doing it for 20 years. I don't think that you will actually end up owning anything, because I think eventually the inflation will kill you and you'll get to the point where you can't afford groceries. Now, I think with the Federal Reserve in America now, I think they've pledged ongoing money printing. Well, this is not going to bode well. This will not bode well for the average person in the street.
Well, I tend to agree that things don't look great. But let me sort of give you a more specific example, right? If you talk to people who've saved over their lives and they've created a little bit of wealth, perhaps through the inflation of their house prices, so they feel as though they've got a little bit of asset behind them, right? And then as they begin to move into old age, suddenly the government turns around and says, right, well, we've got to change the system because there aren't enough younger people now working to be able to cover the costs of retirement and old age and aged care.
They always have an excuse, don't they? They always have an excuse.
Yeah. So we're going to change the system now, and that means that you're going to need to use your assets that you saved earlier in life to cover some of the costs of your old age, right? That's going to be the next part of the story, right? Again, goes back to this cash flow thing, right? So basically, they can't help themselves. They're going to do that. They're going to look at the superannuation pool, which is now $3 trillion, and say, well, we've got to use that. We've got to actually find a way of, liberating those funds and doing something with it. So I'm expecting all of that to play out ahead, right? And so basically, what we now have is a life story where from a very early age, maybe when you're a student, you start incurring debt because you might go to university and you need a HEX, right?
Well, we wouldn't have had, Martin, for the younger viewers, our age group, did you have to go through debt to go to university?
I was able to get a grant to go through
Oh, you're talking about UK now, aren't you?
Yes.
Okay, Australia's a bit different.
Right. So
Australia was different.
Yeah. No, I worked for 3 years, so I actually was able to get a government grant to go to university. But a lot of people these days, you incur a debt from almost day one, right? Then you incur more debt when you buy your property, right? And if you want to buy a house, you've got to save up for a period of time, etc., etc. You go through life, right? And now we're actually talking about later in life, as you move into old age and into retirement and into aged care, and it's the same thing again. So basically, wherever you are across this cycle from cradle to grave, right? Debt accompanies you, right? Cash flow accompanies you, and there are then people with dollars in their eyes just thinking, cash flow, whoa, we can do something with that, right? That is what we've come to. We've come to the financialization of everything, right? And here's the question: that what is society for, right? Is society really just to facilitate that process by which corporations are able to continue to grow and to get larger, right? And are we merely the cannon fodder that ultimately keeps the system going, right? Through our taxes as well, and when things go wrong, well, guess what? The government has to bail them out, and guess who pays for that? Well, that's all part of the story, right? So is that really the net sum game of what society is about? And if you think the answer to that is yes, then I say that is bad news, because I believe that society should be something quite different from that.
You won't get me arguing with that point. We're in total agreement there. I just, what do they say? There's one thing for sure: death and taxes. And now, interestingly enough, I was watching a channel from Germany, and they were talking about strategies on how they could actually, they may be able to solve some of the problems of large corporations virtually walking away scot-free. And it actually matched up with something I actually mentioned to my local federal member, and that was to put a 1% transaction tax on everything that we do. And the reply was straight away, you don't want to pay more tax. I said, 1% isn't going to bother me. It might bother the big corporations who pay nothing. But imagine every time you did a transaction, 1% went to the government, and you couldn't get it back. It's not deductible, regardless of what you do. The government will get it, they get to use it.
Well, I'll tell you this. If you had a 0.05% transaction tax on every financial transaction that's done, right? That would actually immediately create huge pools which could be invested in real businesses. It would stop a lot of the speculative activities, because those speculative trades are made on basis point margins, right? So you've basically just taken away those speculative trades. And what you would do would be you'd actually create essentially a whole new economic model. But I can tell you that financial transaction taxes are seen by the bankers and by central banks and by most governments as an absolute anathema, right? Because they don't want to be less competitive, right? Well, my argument is, if you really want to solve some of these things, you have to think big. So let's impose a financial transaction tax globally, right? And that would immediately take away a lot of the noise out of the system. It would actually enable us to create a pool of wealth, which could then be invested in real things, and it would change the game.
As long as, remember who the tail is and who the dog is. I'd say the bankers are the dog and the government is the tail. And as long as the people had the choice of where that investment would go, rather than the corporations, I think that would. Do we agree there?
Yeah, I think that's right. And so the story was going to go on to say, if you create that pool of value, then you have to have a mechanism to ensure that the investments are actually for society, not for corporates, for society, right? And whether that's actually, better infrastructure or better schools or hospitals or whatever it is, or a better healthcare system. But the point is, it seems to me that the role of government should be to facilitate and enable the superstructure of society to function well, right? And I always think I want to turn it up on its head. So rather than the government that top down saying thou shalt, I want them to be a support agency, right? Helping society and helping individuals and you know, small businesses to thrive and develop, right? That's what we need. That's 1 billion miles from the economic model that we currently have.
Well, now you're going back to the absolute evolution of democracy. Because that's how democracy started. It actually started from the bottom ruling the top, not the top ruling the bottom. We've got the reverse of that. But I think if we did what you just suggested, and I just brought up, well, we can share this 50-50, I don't mind. I think we'd actually solve a lot of the world's problems as long as the bottom up had some sort of regulatory power to have checks and balances, rather than giving that regulatory power to the people at the top. Because that's what I see. I see the people at... Yeah.
And the key question, and I did an interview with Michael Hudson, the famous economist, last year, right, who basically said, look, you've got to understand one thing, right? The 1%, the people who control the system, the people who actually benefit from all of the current models that currently operate, they're not going to give this up lightly.
No,
right?
I agree.
Because it's not in their interests to do that. And that's true of central bankers, and it's true of large corporation leaders and all those things, right? So essentially, the question is, how do you actually create the momentum to be able to actually turn this on its head, right? Because they will not want to yield.
I agree with you. By the way, Michael Hudson is one of my favourite economists. Try and get him back on if you can, because he's a really top economist. He sees the world and the economy as it really is, and he can see how. Well, look, if you look at the economy, let's face it. What's the economy really about? It's about everybody trying to get economic rent from each other. So we produce a service to get a rent.
That goes right back to my question: what is society for, right? So the question is, what's the cart and what's the horse, right? So to my mind, the economy is not an end in itself, right? It's just like GDP is meaningless, right? The economy is there to facilitate other things. It's to facilitate life and those sorts of things, right? So we've got this round the wrong way, right? Because what it actually means is that we're focusing on what should be an input and measuring what should be an input and an output. That's the basic problem. But the problem is we've got too many people with power and money who will benefit from this current myopic system that we've got, whilst real people, ordinary people, are basically, becoming more and more controlled, more and more unable to make independently sensible decisions because of all the issues we've been touching on. So that is the current situation. Then if you recognise that as being the current state of play, and many people don't, but if you do, then the question is, what do you do? How do you change it? And what are the levers that might facilitate change? But step one, which is right where we started, right? You've got to actually understand how the thing actually is working today. And most people don't understand how things actually work today. Most people are still of the view that the government is working for us, that the central bankers are working for us, that the corporations are benign, wonderful organisations that help, etc., right?
Stop it, you're making me laugh.
But isn't that the point? And so in a way, as you come back out the rabbit hole again,
Yep.
The first question you've got to ask yourself is, going back to what I said, is reality on the blink? Well, if you believe that, then frankly, I think reality is on the blink, because I think that what we've been speaking about for the last hour or so is actually much closer to how things really are, right? And if you do believe that things are really rather different from what you thought they were an hour ago, then in a way, maybe we've achieved our objective tonight.
I think we could end it like this. We have an economic China syndrome here. If we continue down the path that we're going, the system will end up melting down. And what will be left is a pile of debt on us and all those assets and everything just going straight to the top. And then we'll own nothing, and I suppose we'll be happy. Is that...
Well, yes, that's certainly one solution. Of course, World Economic Forum, tick. My argument, and I think your argument would be, that's not the only potential alternative. George, it's great to talk with you once again. Thank you for your sharing your thoughts, and I'm sure we'll do it again down the track.
Yes, next time we'll kind of get into the conspiracy tinfoil hat stuff, maybe.
You mean we didn't tonight? Thanks.
Oh,
cheers.
we didn't really, I didn't kind of go, I could have, but I thought let's just talk about what's affecting everybody immediately, get an overview of how corporations are really working, which seems to be self-interest, which is like any normal person has a self-interest, but we're talking multinationals here. And when multinationals have massive control, then we're going down a very slippery slope if they're not checked. And I don't think they're being checked. That's the problem. They say they are, but they're being checked by their own regulatory bodies. So it's like saying, oh, look, I'm a thief, but my friend thief here is going to keep a check on me to make sure that you're looked after. Trust me.
Recursion is a wonderful thing.
Absolutely.
Thanks, George.
Thank you, Martin.